Imagine a joke currency turning into a billion-dollar spectacle in months. Dogecoin did it. And yes, I laughed first, then panicked watching wallets explode. Back in December 2013, Dogecoin launched as a playful spin on a viral Shiba Inu meme with zero roadmap or promises. By January 2014, it reached over $60 million market cap, shocking Bitcoin purists. I remember scoffing at it, ignoring it, then witnessing it outperform serious projects. That moment planted the dangerous idea: attention itself could be monetized. And here's where things get wild. Meme coins aren't just money, they're psychology, volatility, and social engineering wrapped in digital humor. From hacked, verified accounts to pump-and-dump spirals, the game has evolved, becoming smarter and faster. I want to ask, where are you watching from right now? Because your location shapes how these shifts hit you. Stick with me till the end, and you'll discover the single most important insight every crypto fan should know. Back in December 2013, Dogecoin launched as a playful spin on a viral Shiba Inu meme. No roadmap, no promises, just internet humor attached to crypto code. Within weeks, it amassed over $60 million market cap, catching even Bitcoin diehards off guard as the first meme coin phenomenon. Has any digital joke ever grown teeth like that? Since then, platforms like Reddit and X have propelled tokens into mainstream chats, and recently even meme coins reached traditional finance with a Dogecoin ETF debut. This story taught the market something huge. Attention has real economic force, sometimes more than fundamentals. By 2021, meme coins went from fringe jokes to headline-grabbing market forces. Dogecoin surged over 800% early in the year, briefly topping major crypto rankings amid social frenzy and celebrity tweets. SHIB rode that wave too, exploding into the top 10 and igniting talk of Dogecoin killers. Financial outlets now warn that these assets are driven by community hype and extreme volatility, not fundamentals. I've seen small stakes balloon into big wins, and life savings vaporize just as fast. Meme coins taught the crypto world that volatility isn't accidental, it's the product. You ever laugh at something only to watch it bite you later? Between 2020 and 2022, hackers breached multiple verified X accounts, yes, even big names like BNB Chain and meme coin platforms, to pump fake meme coins and phishing links with alarming reach. Officials like Binance's CZ have publicly warned that compromised accounts now push fraudulent airdrops and wallet-stealing scams, stressing caution for anyone seeing blue-check crypto promos online. The twist? Trust icons became attack vectors, flipping credibility into chaos. Have you seen suspicious crypto posts where you are watching from right now? What did they promise? Let's speak plainly about meme coins, those viral tokens that skyrocket on hype, then crash like a dropped souffle. By late 2021, most played the same game. Stealth launch, influencer frenzy, parabolic charts, liquidity pulled, silence. In 2025, Binance Research reported that 97% of meme coins have already failed, often collapsing after massive short-lived pumps. Recent market data shows meme assets shedding billions as trading volumes collapse. So I stopped asking, will it crash, and began asking, when, because explosive pumps often signal countdowns, not success. You ever look at the crypto space and think, wow, this could be the Wild West all over again? Well, buckle up. Industry research and public datasets show that rug pulls and scam tokens have been draining wallets at an alarming rate over the past few years. Rug pulls alone have led to hundreds of millions in losses in 2024, with some estimates suggesting over $500 million wiped out in meme coin rug pulls and associated scams, according to Merkle Science via CoinDesk. Liquidity promises? Fake. Contract code? Often mutable. And developers? Enough vanish to make Houdini proud. I've personally watched dev teams pump a token, then retreat into thin digital air while community wallets cratered. But this isn't random chaos. It's evolutionary, almost like refinement. Scammers have gotten faster, slicker, and more believable over time, weaving social media hype into their schemes with shocking sophistication. Major players like Coinbase and Binance now flag rug pull risks, while security firms urge tighter KYC, audits, and on-chain monitoring tools to stem these losses.
You know when a party hits peak chaos and half the crowd starts asking, "Why are we here again?" That's exactly what happened to the meme coin world between 2022 and 2024. The community literally split into two camps, the diehard believers still clutching their tokens like Lucky Charms, and the burned veterans who swore they'd never buy another 1000x gem. Retail trading volume in meme coins slowed significantly by late 2025, as trading data showed fewer everyday traders swapping coins, while engagement on social platforms like X and TikTok stayed alive. But let's be real. Interest never died, it evolved. Meme coin attention exploded again in early 2026, with the total market cap rising back toward $47 billion and daily volumes hitting billions, lighting a fresh spark under the scene. Lately, I've been thinking about how regulators, once quiet in the background, now feel like that one friend at the party telling everyone to calm down. From MiCA in the European Union requiring licensed crypto service providers and investor protections across member states, to the UK's upcoming crypto asset regulatory regime aimed at bringing exchanges and custodians under traditional financial oversight, the world is tightening the rules around digital assets. Just this week, the Financial Times reported that the UK will enforce the crypto asset reporting framework in 2026, meaning exchanges must share detailed transaction data with HMRC to clamp down on tax evasion, a clear signal that crypto is entering the mainstream regulatory spotlight. So, meme coins, once the wild frontier with zero gatekeepers, now face a crossroads: either scale the compliance mountain or slip into the shadows with increased risk. Regulators from Hong Kong to Singapore are rolling out licensing and AML requirements, and even places that once welcomed digital assets are aligning with global standards. I've seen innovation adapt under pressure before. The question now isn't whether rules will slow things down, it's how the next generation of Web3 players will evolve to survive them. Look, whether you love them or roll your eyes at them, meme coins kept breathing through the bear market, and that's wild. In early 2026, we're seeing total meme coin market cap rebound by around $11 billion this week, with daily trading volumes jumping too, signaling renewed speculative interest after a rough few quarters. Remember all those headlines claiming meme coins were over? CoinGecko analysts suggested serious dips and insider sell-offs earlier, yet just weeks later, tokens remained central to retail narratives with active communities and new launches. I've watched Dogecoin, Shiba Inu, and newer entries like SPX 6900 light up charts while old skeptics scratch their heads. So what's going on? Are meme coins pure hype, or could their cultural stickiness be an adaptive survival strategy? Some research shows meme coins dominated narrative attention and retail interest even when broader crypto cooled. Maybe it's the psychology, fear of missing out, or the thrill of watching a viral token spike overnight. Either way, these tokens are behaving more like a community-driven cultural phenomenon than just a price chart. Have you seen any meme coin action where you're watching from? Stay tuned, because later I'll share the single trend that could redefine the whole meme coin cycle.
By 2025, we reached a weird moment where social platforms practically own attention the way exchanges own order books. A single post on X, TikTok, or Reddit can hit millions in minutes and immediately echo through price charts. According to engagement data, Dogecoin alone generated millions of interactions across social channels in 24 hours, dwarfing smaller tokens chatter and reinforcing how meme communities can drive markets purely through buzz. Just look at what happened on Coinbase's Base network last week, when the creator token tied to journalist Nick Shirley crashed over 60% after going viral, reminding everyone that virality and value are very different things. It's like giving a match to a kid in a fireworks factory. Fun until it explodes. Research from crypto analytics groups links meme coin price swings directly to social mentions, where spikes in volume and sentiment often follow viral posts rather than fundamentals. Let's be honest, the meme coin world feels like crypto's Wild West, with a twist of Silicon Valley sci-fi. What we're seeing now isn't your uncle's Dogecoin from 2013. The meme coins launching in 2025-2026 are layered with token burn mechanics, auto fee routing, and even community governance twists that border on utility territory. SHIB's burn systems are actively reducing supply while sustaining long-term holders, according to recent market data on evolving meme coin tokenomics. I've watched this space evolve from pure hype to engineered hype. Projects like Bullzilla are even using staged burns and staking rewards to reward participation rather than pure speculation. And presale mechanics, complete with decentralized governance incentives, are turning social communities into real economic engines. But let's get real for a moment. Smarter tokenomics also means smarter scams. Advanced features can mask risk just as well as they boost perceived credibility, making it harder for traders to separate signal from noise. So are these coins better crypto assets or just better engineered mirages? Lately, I've been watching the on-chain data shift with a mix of curiosity and slight paranoia, like someone quietly turning up the bass at a party before the beat drops. Wallet clustering, early liquidity patterns, deployment timing synced with social spikes. These are the subtle footprints of whales and builders moving before most of us even smell the volatility. Major analytics platforms, like those covered in Nansen's whale movement research, show how clustering can reveal coordinated capital allocation before price moves materialize. Crypto risk models were recently highlighted by CCN, explaining how on-chain forensics use graph analytics and behavioral pattern detection to separate genuine market stress signals from random noise. Meanwhile, Ethereum and other markets still show weakening momentum and fading liquidity, according to analysts, which historically prolongs stress phases before any break higher.
I've been watching something curious unfold across crypto charts and headlines. Retail traders are stepping cautiously back into the arena, while big influencers appear unusually hesitant to shill the next can't-miss token. Meanwhile, regulators are sharpening their pencils, hinting at clearer rules that could reshape speculative markets. According to a Femex report, meme coins like Pepe and Bonk have surged as early indicators of broader crypto optimism in 2026, even as broader sentiment remains fragmented. So where does that leave the meme coin world? The skepticism flooding forums and price charts can create asymmetric opportunities, meaning the very disbelief you hear whispered could be the fuel behind the next explosive moves. It reminds me of the 2025 cycle, when meme coins briefly dominated narrative interest and retail sentiment spiked during Bitcoin's rallies, only for sentiment to cool sharply later. Look, right now, the meme coin world feels like a high-stakes poker game where everyone's screaming all in or folding all at the same time. In early 2026, we saw tokens like Pepe pump over 30% in a single session, and Floki joined the rally with double-digit gains as community buzz resurged across social feeds. Retail traders and analytics both flagged this as a risk-on indicator of broader crypto momentum. But let's be honest, memes are volatile by design. Analysts from Femex and Yahoo Finance highlighted that while meme coins can lead rallies, their underlying structures remain fragile, dominated by sentiment swings and social hype more than fundamentals. So the big question for 2026? Are these moves signals of a genuine resurgence or just a spectacular bounce before another wipeout? I've lived through cycles where dreams turned to dust and others where absurdity minted millionaires. You've seen the headlines, I've lived the tears. Stick with me to unpack the real catalyst behind meme coins this year, because the outcome could rewrite how we think about speculation in Web3. I won't drop the token's name here, but hear me out because what's happening feels eerily familiar if you've been around this space long enough. Right now, one meme coin actually exhibits the same early-stage signs that preceded every explosive run I've seen since 2021. Thin liquidity, a crowd-driven narrative, and viral social momentum that far outpaces fundamentals. We're talking about classic structural cues that draw traders in before any price action even kicks off. Just look at the way meme coins have been trending as 2026 begins. Viral pre-sale interest in projects like Maxi Doge have pulled more than $4 million from investors, briefly pushing meme tokens back into headlines. Even mainstream reporting on meme coin momentum this week suggests the sector is outperforming the broader market, capturing trader attention and sparking fresh debate. But let's be honest, memes are volatile by design.
Analysts from Femax and Yahoo Finance highlighted that while meme coins can lead rallies, their underlying structures remain fragile, dominated by sentiment swings and social hype more than fundamentals. So the big question for 2026, are these moves signals of a genuine resurgence or just a spectacular bounce before another wipeout? I've lived through cycles where dreams turned to dust and others where absurdity minted millionaires. You've seen the headlines, I've lived the tears. Stick with me to unpack the real catalyst behind meme coins this year, because the outcome could rewrite how we think about speculation in Web3.
Let's talk about where meme coins actually stand as we kick off 2026. Are we looking at a full-blown comeback or a market collapse replay? Paradoxically, evidence points to both happening at once, like watching a firework explode and a house burn down simultaneously. Right now, the meme coin market cap has jumped back above $47 billion, with tokens such as Dogecoin, Shiba Inu, Pepe, and Bonk leading gains as Bitcoin holds above key levels in early 2026, according to recently reported market data. Total trading volume has spiked too, showing renewed risk appetite among traders. But here's the twist. While some analysts see these price moves as a sign of renewed retail interest and a broader risk-on rally, others warn that meme coins remain structurally fragile, vulnerable to whale dominance and sharp corrections, as outlined by researchers studying meme coin market dynamics. If this video resonates with you, click on the card above to watch other interesting videos. This is Blockchain Money.